again, Maverick traders. Welcome out to your market roundup, July 1st. Corey here with you. We're going to take a look at meaningful news in the markets. We're going to look at what's happening with the majority of stocks versus just the large cap tech. And then we're going to talk about ideas and a special focus on the anti-sideways trade today. We're going to talk about some Bollinger Band squeezes, some really good opportunities that the market is giving us.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So when you look at today on the surface, and this has been a common theme, Dow, S&P, NASDAQ all slightly higher. IWM, the Russell, down almost 1%. Oil up nicely, up 2.5%. Gold flat. Oil was up nicely. It's back up towards the 2024 highs. And then the Supreme Court ruled that Trump has immunity for official acts that he did as president. Advanced decline line, about 61% of stocks down for the day. And this speaks to, again, the indexes were up, but we actually had 60% of stocks going down, and we almost have nearly 60% of stocks, 57%, trending below their 50-period moving average. So that's just not what you're seeing in the index charts. When you look at this chart of the S&P 500, you say, well, we're high basing up near the highs. The market is in great shape. The market is not really in great shape. 60% of stocks are going down, but the most important ones are going up, and for an index, that's what matters most. So the biggest companies, Apple, Microsoft, Nvidia, and so forth, they're holding up quite nicely. You can certainly see that in the NASDAQ, where, again, we're consolidating, but it's been the leadership group. As it goes, so goes the market to a certain extent. So you've got to be a little bit careful about looking at the S&P 500 and thinking we're in a bull market. We're in a bull market where it matters in large cap tech from an index perspective, but there's plenty of opportunities with downward trending sectors and downward trending stocks. So it's sort of a difficult environment in that a lot of these sectors, if you were to look at industrials and energy and real estate and utilities, and the list goes on and on. As you look at those charts, those sectors are not performing, but again, they're small sectors when compared to over here, the technology and the communication sector and so forth. Now, as we look at the heat map, you can see some pockets of green, certainly Tesla and Amazon. Most of the big squares are in the green. Most of the smaller squares are in the red, and that's been the dynamic that has been in play for some time. Certainly a lot of weakness right here in the HMO stocks, the United Healths of the world. A lot of red up here in this segment of the consumer. So this segment being the home builders, bright red right in there. They had a poor day. And some of the material stocks also a little bit weaker. Now, as we look at opportunities and we look at this index, you'd say, well, the index is pushed by the tech sector, and that sector looks fine, right? We're still in an uptrend, no changes there. But as we look below the surface, I think there's something interesting. And I want to call this, by the way, I'm going to call this the anti-neutral trade. What do I mean by that? I wanted to put them in a category where this is basically, I'm going to highlight a couple of volatility trading signals and opportunities that haven't quite triggered yet, but we're going to look at those. First, we'll start with a bullish candidate. So here's AbbVie. You can see it's just started its uptrend. 20 just crossed above the 50, so we're in a new phase. We've had pullbacks here recently, kind of a consolidation or ascending triangle. AbbVie, if we can move back up here again, and if it doesn't do that, I'm not going to trigger in, but if we can go back up above these highs one more time, I think we should be clear sailing up there into the high 170s, maybe even the 180s. Now, Next, we're going to talk about the anti-sideways. So this is RSP. This is the equal weight S&P 500. And I put Bollinger Bands on here so you could see how tight they are. Here's the upper band, here's the lower band. They are abnormally squeezed. If you were to look at this percentile, this is as tight as the Bollinger Bands have been on this for over 5 years. You probably have to go back 10 years or more. So we're really in a tight consolidation. What tends to happen out of a really abnormally tight consolidation is a volatility move. It just started to trigger today. See how this band went down and this band went up. That's the start of the expansion. You can sort of see it down here. This is called the Bollinger Band width indicator. This reading below 2, again, that's way, way low. That tells you, if you were to look at this again on a 5-year chart, we haven't had such a low reading. But again, I want your eyes to focus on that it's coming back up. It's just starting to tilt up. That means we've gone from contracting Bollinger Bands when it's trending lower. The two bands are coming together. That one's going down, that one's going up, and you're in a consolidation. When those bands start to separate, that's the increasing volatility signal, and it's just happening right here. This is the equal weight ETF, and it's the S&P 500 broken up in equal shares. This is not, I don't think, a good sign for the markets. It better hold right here, right now. If you look, this is why I say it really hasn't triggered quite yet, because we're on top of support. Here's the low, here's the low, we're on top of that low. But it looks like volatility's just starting up, and what might happen is a volatility expansion. If we break this low, I would think that's a bad signal for markets. We already know that the majority of stocks are trending down. Can tech just continue vertically while all of these other sectors are a canary in the coal mine, so to speak, starting to break down, breaking multi-week support levels and such? I don't think that would be good news. Now, if the market can stabilize right here and just bounce back up, well, false alarm a little bit, but I tend to think that the markets might be in a little bit of trouble here, that these other sectors starting to break down, and then what you'll get is people starting to say, well, maybe we should lock in our profits on our tech space. And if that starts to go and they start to lock in profits on Apple and Amazon and Nvidia and so on, then it's an even bigger issue for the broader market. So does this lead and then the S&P and the NASDAQ and so on follow? That might be the case. Here's another candidate for this tight Bollinger Band squeeze idea. Here's Intel. Look at how tight those Bollinger Bands are. Lowest reading in multiple years. Intel really hasn't started the upward turn yet. You can't really say that it started its upward kink, where this Bollinger Band goes this way and this one starts to go this way. So we don't have a signal yet on Intel either, but when it happens, it could go either way. By the way, volatility is just, it's volatile, but you could have a big volatility move where the stock explodes this way or this way. But generally speaking, when you get into this type of tight consolidation, I sort of think of it like Jack in the Box, dun da dun da 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 da, and you're not quite sure when it's going to pop out, but when it does, it's a little scary and it's a little, shocking when it happens. Well, that's how you kind of come out of these, is a big volatility move. Now let's go to a bearish candidate. Here's Lowe's, and you can see that Lowe's Corp, LOW, the symbol, we're right down on top of the support zone. Sort of a descending triangle or inverse cup and handle type of idea. You've been trending lower, and you may be due for a break of support and further downside. Quite a few charts in this downward trending market, because again, while the index level, S&P, NASDAQ are holding up, you got a lot of downward trending and bearish candidates out there. Markets consolidating gains, tight Bollinger Band squeezes, and possibly some a precursor to more downside. Fed Chair Powell speaks on Tuesday. Non-farm payrolls come out on Friday. On the earnings side, it's about as quiet a week as you're ever going to have. So, not too much happening there. Markets are closed on Thursday, of course, for July 4th, Independence Day here in the U.S. Hope you enjoyed the market roundup. Have a great week, everyone. We'll see you next time.